Hey guys, welcome back to another video. I hope you guys are having a wonderful day. After seeing the trading session for natural gas open around the same price point on Monday, I'm very certain a lot of you guys who were super fearful in the weekend have calmed down a little bit. Now San Diego wants to slash 90% of natural gas from all its buildings by 2035. And that's a big statement. And on the other end, EU facing costly winter without enough long-term natural gas deals, and they still haven't done that to this point. So what will next winter look like? Before we get into all of that, if you're here for the first time, you do want to stay up to date with everything to do with natural gas, scroll down, tap the red subscribe button. While you're there, slap a like on the video for the YouTube algorithm so everyone can stay up to date with the latest info. Now the city's plan includes existing homes. An analysis of all the buildings in San Diego is scheduled to be completed in coming months to get a handle on usage and the potential cost of phasing out natural gas. So pretty much they're trying to find out what will be the cost if they completely remove natural gas out of the picture. If the cost is bearable, they want to try to slash down as much use of natural gas in San Diego as possible. And if this goes as they're trying to, personally, I think the expense would be too high, especially the fact that natural gas price is so low right now. If the price was sitting close to $10, that would be a different story, but you do need to understand right now it is actually sitting at quite a low price point. So if they do decide to switch it to something else, it would definitely be a lot more expensive to do the same thing that natural gas can do for cheaper. The best reason that they're trying to do this is they want climate control to be a little bit under control. If this goes as planned, I mean, this will decrease the demand of natural gas, or the US natural gas, a little bit, because San Diego will stop trying to use it as much as they used to before. Another thing is EU. We know that since the Ukraine-Russia problem started, EU has been facing a lot of problems with their deadlines and also trying to meet the needs of natural gas, because Russia, when they received all the sanctions from US and the UK as well, they were not happy with it, so they decided to turn off the natural gas supply, which caused a huge problem for EU, which they had to find alternates. Now keep in mind, you might be able to find the alternates, but the only downside that you need to understand is those alternates are going to be way more expensive compared to something else, such as what you used to buy from, such as Russia. Now keep in mind, Norway has been one of the greatest suppliers of natural gas to the EU, and the other one is the USA, which is the only reason why EU was able to survive the 2022 winter. But what will happen in 2023? There are some plans, and I will show you down the line. Another thing is the price. As you guys can see, the price did open just a slightly bit lower than where it closed last week, but still, as you guys can see, it is still under the same zone. It closed around the 34, but now it is sitting close to 21, which isn't a huge difference, because I personally think that it is still in the same area and it can probably consolidate around this zone before it tests the period, which will be close to $2. Now if it decides to test $2, you guys know that is going to be a very crucial point for natural gas, because if it decides to break below that, that will be the final psychological support we have before falling down to like a 1.5. 1.8 is an actual barrier, such as a support, but this is a psychological one, because $2 is just a even number, or an integer. That's probably the better way to say it. Another thing is the RSI line is slowly starting to go into the middle area and get out of the oversold zone, which is good in a way, because we do not want to see everyone not be confident with natural gas. If it's just constantly staying in the oversold zone, then the new traders will be a little concerned in terms of what direction to pick. I know a lot of people who watch my videos are not happy with the way natural gas has turned out in the past 3 months. A lot of you guys have had problems because you nearly got your account blown because you were going on a very strong leverage. All I'm going to say is, if you're a sell trader at this point, I would reckon just you can do the short trades, but just be a little cautious if you are doing some leverage trades. Also, if you look at the trading volume, it is significantly lower compared to what it was just before it closed on Thursday. Right now it is very hard to switch the super trend into an uptrend, but we will just have to wait and see. And finally, I want to show you guys this. So we talked about the Grand Coke natural gas. There is some new information that I can tell you about it, which is the state says cause release of natural gas was due to TIW, safety valve failure on tubing, and blind ram failure on bulb. Representatives from Rose and Wild are reportedly on the location and making a plan for it to make sure that the road is closed and everyone is safe from what is going on. This is really concerning, but at the same time it is in good hands and it is being controlled quite well. Another thing which I want to show you guys is this. So a lot of people are unsure which are the largest countries that produce natural gas. Now in number 3 we have Iran, which does 8,000 billion cubic feet. In number 2 we have Russia, which does pretty much 3 times more than Iran, and this is only 2021 production levels. And in number 1 we have the USA, which does about 10 billion more than the Russia. Now you do realize that inside of 2022 US must have done significantly higher than Russia because Russia was pretty much stuck up in the war. Another thing that you need to understand is US was trying to provide a lot of natural gas to the EU and try to make profit. That's all I'm going to say, and that's why they were trying to produce as much as possible, and that is exactly what has caused the price to go so far down, because we did see that there was so much supply, but now EU, because it's out of the winter, it doesn't actually need that much, but US is still producing, causing the price to go down. Another thing is the Melita, I'm sorry if I mispronounced that, oil and gas reopens gas well in this area. Now for the people who do not know where this area is, it is pretty much the middle sea between the EU and Africa. Now this is really cool because you do realize this sea actually connects a lot of important people together. It connects Egypt, Libya, Algeria into the EU, which is Italy, Greece, and Croatia. Now you need to understand, on the other end we have Turkey, Syria, and Jordan. These are some of the largest providers of natural gas, and now we are able to see some natural gas stuff being opened up in that area. Shows that there is some future increase in supply coming very soon. And finally, I want to show you guys this. Natural gas, oil, and Brent oil. Oil stays in the range bound, but on the other end, natural gas pulls back after the EIA report. Will it keep pulling down, or will it be able to secure itself and be able to come back up? Personally, I feel like this week's report will play a very crucial role, and also the G7 meeting on the 14th and the 15th of April in Japan will also play a very crucial role on the price of natural gas. Other than that, I hope you guys enjoyed today's video. If you did, drop a like on it. If you're new to the channel, do want to stay up to date with everything, subscribe. If you don't want to, I completely understand. I don't mind. You guys are all amazing still. I hope you have a great day, and I'll see you guys soon. I'm out. Peace.